Hey traders, Raghee here, and in this free recap video, we're going to talk about the downtrends that continue to persist this week. This week was a bit of a roller coaster for bulls that continued to believe that this particular volatile event, this volatility event that we've seen since the sell-off here, is still much more akin to the February through April volatility that we saw earlier this year. And I've been really just gently, and I say gently because I know when switch comes, when a switch like this in trend, or a switch in the market trend happens quickly, especially one where a very celebrated and well participated bull market rolls over. You know, that person that says, hey gang, the bear market, or at least a chop, might be here, you know, you got to be kind of ginger about it. And that's what I've been mentioning to traders. And by the way, I want to be cautious about it too, because I don't want to fearmonger, and I don't want to get too ahead of myself, because look, that's about ego and not about trading. I think there are a few cues here that we want to continue to watch in the coming days and weeks that will better allow us to understand the organization that this downtrend might really have. And I do think it does. And the one that's first really catching my attention is the fact that after the downtrend, we really weren't willing to take much more than about half the move back. And half the move landed us in the wave right there. And that correction and that resistance in the wave is one of the things that I look for to confirm that we're in the early stages of a downtrend. The one thing that's still pretty, well, I should say bullish enough, is the fact that we're still trading above the 200 EMA. So you have the 200 EMA right there. And we're still above that. Now you'll notice we're not above that level on the Russell. So the Russell's already shown us that small cap have been able to break that. And I think the next most bearish market is the NASDAQ. And even though the NASDAQ continues to bounce around that 200, I think it's fairly inevitable that we're going to take this 200 support out and start to trade below 7,100 much more convincingly. And I do think we're going to break 6,900 and get down to lower lows, but that's my opinion. That's not what price says yet. So let's take it one stage at a time. Let's take out the 200, then let's take out 7,000, then let's take out 6,900, and these things happen in stages. So each stage show us that this is what's happening. And why do I think down is the path of least resistance? Well, we've taken back that big gain day when people thought, oh, this downtrend is for naught, and everyone's, you know, getting jubilant again. Bad idea, okay? But if this downtrend really is going to organize the way it did on the Russell, there are some stages, there are some obstacles it's going to then prove to me that it's capable of taking out. And we haven't taken those levels out yet. Similar set of levels on the S&P. Let's take out the 200, 2,500, then this low. And then I think 27 is going to be really where this is going to convince a lot of folks. But taking out a new low and then taking out 27, that's where if there's going to be a bottom falling out of this market, it's going to happen below 27. When I say bottom falling out, I'm not talking, you know, something akin to 87 or 07, you know, all this hyperbole that's out there. I'm talking about, you know, a much more organized downtrend, you know, starting to show better trend organization, not just a bunch of bearishness and volatility. Now, one of the things that continues to be interesting is the fact that utilities are up. This is typical behavior when a market is fleeing to the less sexy names, not tech, right? It's going into less consumer discretionary. It's going into staples. It's going into healthcare. It's going into utilities. Right? Utilities and staples, take a look. Look who was up today on the down day. These are really hallmarks of, you know, I think the early stages of a market looking for safety. Okay, dollar's still pretty strong, but look who's now also holding their own, not rallying, but gold. I think that's a very early sign. Okay, copper remains heavy, right? Copper remains heavy, and that's one of the signs of lack of expansion out there in the market. Crude oil is going to throw a lot of traders off the scent. Don't be one of them. I do believe crude is probably going to bounce one more time because there are a set of fundamentals apart from the risk aversion that's happening. I think after November, after we get past those Iran sanctions, we'll probably see crude start to chop around a little bit more. It already is, and start to look less like the uptrend it has been and more like a choppy market, maybe even slightly weaker. But we'll have to make that assessment after November. So don't let anybody tell you that low volume in some of these rallies is necessarily something that's indicative of a downtrend. We've had plenty of low volume rallies, so that's not really true. But look at XLP and look at XLU and look at XLV. Also, copper. Weakness in copper, I think, is a good sign. Wait for crude. Crude has other narratives, but don't let people say, well, crude's resilient. That's proof that we're going to... No. That's proof that sanctions are something that the market's still concerned about. Okay? So that is what we're looking at here. Enjoy your weekend. I'll see you in the next update.